maybe after this topic, we'll have an opportunity to look at them, correct? But today we want to start a new topic. We want to start a new topic called control account. So I've shared the notes on control account. Umesha join? Join. Now we have a control account. So we need to understand what we mean by a control account. By a control, we have two kinds of control account. We have sales ledger control account. We have sales ledger control account. Sales ledger control account. And then we have, or sometimes we call it debtors ledger control accounts. Those who have purchases ledger control account. So what is a control account? A control account is an account that records all the transactions that are posted in the individual ledger accounts for debtors and suppliers. So when you have debtors, you can have even 1 million debtors to facilitate the extraction of the balance at the end of the period. You can have 1 million debtors or even a very huge number of debtors. Debtors are those customers that buy on credit. Now, you need to know the balance of the debtors that you're going to use to prepare your final statement. Imagine when you have 1 million debtors, you have to go to each and every individual account to get their balances so that you add together, and that is at the end of the period. It becomes very cumbersome and complicated, isn't it? So now to avoid that, we also have another account. The individual posting that we do to the ledger account, we also post to that account. And that account, we call it control account. So like, for example, we have the debtors control account here. Debtors control account. Sales ledger control account. So we have debtors. We have data A, you can have data A, data B, data C, and so forth and so on. So we have numerous of them. Now we want to get the balances of all these ones at the end of the period so that we can be able to prepare our statements. Some organizations have even millions of debtors. Like, for example, Safaricom. All of us are customers of Safaricom, isn't it? Some of us are debted to Safaricom. We are debtors to Safaricom, isn't it? So at the end of the period, now getting the value of these debtors, going to individual accounts, it becomes very cumbersome. So the posting that you do to the individual account, you also come and post to this account. For example, when you make credit sales to a debtor, you credit your sales account and you debit the debtor, isn't it? So every time you debit the debtor, the same amount you also debit to the control account. So the balance of the control account at the end of the period is taken to be the balance of the debtors. I don't know that we are communicating. So this account that posts all the posting, it contains all the posting that are done to the individual ledger accounts to facilitate the extraction of the balances at the end of the period. That is the control account. So I don't want you to be asked anywhere else, you know what is a control account, and then you're still beating around the bush. You should be able to explain. So tunasema hii inatusaidia kupata ile balance ya debtors at the end of the period, isn't it? So now we all know, now when you're making debtors account, those items that increases the value of debtors are debited, correct? All the items that increases the value of debtors are debited. For example, we have balances on both sides. We have balance go down here, and you also have balance go down here. Why do we have balances on both sides? Some of our debtors are paid in advance, isn't it? Some of our debtors are paid in advance, so their balance will be on this side. Others, they owe business money, so their balance will be on this side. So the debit side, we record those items that increases the value of debtors. For example, here we have credit sales. Credit sales. So you record here credit sales. We also have dishonored checks. Dishonored. We also have dishonored checks. We also have dishonored checks. Dishonored checks. So we record here dishonored checks. What is a dishonored check? These are checks that you receive from a debtor, reducing their balances. But when you bank that check, it was rejected. So it means you're still claiming that money from the same customer, isn't it? So he was clearing the balance, then he paid you, he paid the organization. When that check was banned, it was rejected. So the money is still being claimed. Is it so? Then another thing is interest on overdue accounts. So when someone is buying on credit, you agree the credit period. That is the number of days they have to take to settle their accounts. If those days surpass or the debt is not yet settled within the agreed time, there's an interest sometimes we agree is going to be charged. So that interest will increase the value of debt, isn't it? Interest on overdue account. Are we together? And then there's also refund to customers, refund. This side are those items that reduce the value of debtors. For example, they can pay cash or bank. They can give you a check or they can give you money in form of hard cash. So that will reduce the account. So you write here. Some of the customers will return goods. We call it return inwards. So you deduct here. Return inwards. Some of them will not pay at all. We call them bad debts written off. So we discover that this debtor will not pay. So we don't carry that amount in our books. We eliminate it by writing off the amount. We call it bad debt. So we eliminate it. Some of them we call it contra. Some of them are our customers are the same as suppliers. So they are selling to the business and the business is selling to them. So there's an agreement between both parties that we don't pay each other this amount, isn't it? So we agree with them, don't pay us this amount, and we're also not going to pay you this amount. So they cancel each other, isn't it? So that is called contra. Someone is a supplier at the same time, a customer. And then there is what you call discount allowed. You give them discount, you allow them to pay less, so it will reduce. Sometimes we also have allowances here. You give them allowances, so that one is on that side. Then now at the end we'll have balance carried down here. And then we have balance carried down. Balance carried down. Balance carried down. So that is how we prepare. We call it debtors control account or sometimes sales ledger control account. Any question? Who does not understand what we mean by sales ledger control accounts or debtors ledger control account? Anyone who does not understand? That is how it is. We also have creditors control account. This one now is maintained for suppliers. Suppliers, the name that we give to suppliers, sometimes we call them creditors. They sell to the business on credit. So we can have so many suppliers, and then it becomes very cumbersome to extract their balance at the end of the period. So all the posting that we do to the individual supplier account, we also post them to this account. So the balance in this account will be taken to be the balance of suppliers at the end of the period, so that we can now use it to make our statement. So we have here, we call it creditors control account. So the balance go down will be on this side. Mostly a creditor is a liability. So the balance go down will be on this side. And then we also have balance go down will be on this side. So this side represents those items that reduces the value of suppliers or reduce the value of creditors. Are we together? Like now they can be paid, you can pay them bank, they can be paid through bank or cash, so you debit. They can also return goods, we call it returns, return outwards. They can also offer discounts to the business, we call it discount received. And there is also what we call contra here. This contra now. We have understood what it means by contra. And then here there are those items that increases the value. We have credit purchases. And then refunds. Then here we have the balance carried down. balance carried down. So that is how we prepare the sales ledger and purchases ledger control account. So another thing that you're supposed to know on this one, when you check that particular handout that I've given, so cash receipts from cash sales, I mean cash transactions should not appear here. When we make cash sales, if I get a figure for cash sales in the debtors control or sales ledger, then I know you still don't understand it. So this one is meant for debtors only. Debtors are credit customers. So those things that you make on cash basis should not appear anywhere here. That is NB number one. Cash sales are never recorded in the debtors control accounts. Number two, provision for bad and doubtful dates. Provision for bad dates should not be recorded here. Provision for bad dates. That is NB number two. Cash purchases should not be recorded here. We only record credit purchases. So the cash that we pay for cash purchases should not appear anywhere in the creditors control account. Sasawa. Then now, why do we prepare this control account? What is the purposes of preparing control account? Number one, as we have said, it is to enable us to extract the balances of debtors and creditors very fast or quickly for preparation of the final statements. It facilitates extraction of the debtors balance and creditors balance at the end of the period. That is number one. And also it also checks arithmetic accuracy of posting in the individual ledger account. So and eventually we will also check the balances in the individual ledger accounts and these balances to see whether they agree. We will go to one individual account one by one, isn't it? And then we confirm with this closing balance to see whether, so it checks the arithmetic accuracy of the posting in the individual ledger accounts. And also it's also to help to detect and prevent errors and fraud. So when you get these balances are different from those ones that are in the individual ledgers, they could be either because of two reasons, either there's fraud or there's mistakes. So now that one will be able to be revealed by this account. So it helps us to check. And then to facilitate delegation of duties among debtors and creditors, clerks, to facilitate the delegation of duties. So there's an example for question that are given there. There's an example of the question that are given there. So there is an example there. So the example there, I think I started from the CPA question, but I can't remember which year. So part A of the question reads, explain the purposes for which control accounts are prepared. We have already explained that. Then part B, the balances and transactions affecting the control accounts of Capedo Limited for the month of November 2020 are listed below. So you have the item there. And then required, the sales ledger and purchases ledger control accounts for the month of November 2020. So they want you have been given the items, a list of items. So you're supposed to prepare sales ledger and purchases ledger control account. So now you will open them concurrently. You'll open them concurrently. So now we are Capedo Limited. You write here Capedo Limited, sales ledger control account for the month of November 2020. And then you underline there. Then you can also come here and write here Capedo Limited, purchases ledger control account, purchases ledger control account for the month of November 2020, and then you underline. So now you go to the information, that is provided. So we have been given the first information is the balancing, the opening balance, sales ledger. So we have the debit balance. So the balance, the opening balance, you indicate it the way they are. If they have told you it's a debit balance, you post it on the debit side. I hope you understand. This is a ledger. The left-hand side of the ledger is called the debit side. So you come here right here, balance brought down. Balance brought down. It is how much? 91. This is 91,23,000. So right here. It also has a credit balance here, balance brought down, which is 22,11,000, isn't it? So you put that amount, that one like that. Then we have purchases, ledger. So we have the balance brought down. Balance brought down for purchases ledger is 44,90,000, isn't it? And then we have here balance brought down. 88,000. So you start like that. And then now we go to the transaction that occurred during the period, during November. So the first transaction was purchases on credit. They purchased on credit. They made credit purchases. So where do you post in the control accounts? Credit purchases. We post where? Credit side here, isn't it? So right here, credit purchases. Credit purchases. When you purchase on credit, you debit the purchases and you credit suppliers, isn't it? So that is how much? 135,000, correct? That is number one. That is where you post. Are we together? We go to the next item. Allowances to customers, not from customers. Supposed to be allowances to customers, correct? Allowances. Is it allowances? How much is it? Huh? 600 is supposed to be allowances from suppliers. Allowances from, you rectify that one. That is allowances from suppliers. Allowances. How much is it? 629 is supposed to be allowances from suppliers. Sorry for that mix up. So kindly, in your own time, when you print that handout, you can make corrections. That is allowances from suppliers, not customers, isn't it? Then receipts from customers by check. Receipt from customers by. So in other words, the customers paid by check. So where do you put that one? Where is the posting? Do we make that posting? The customers paid. So when they pay, they are reducing the account. That is sales ledger, isn't it? So they paid, we say their bank. They paid how much? 273, 70,000. Tunaelewana? Ama ni ngumu? Unaelewa? We go to the next transaction. Sales on credit. Credit sales. Where do we post it? Credit sales. Sales ledger side. Debit side, isn't it? So here we write here credit sales. So write here credit sales. Credit sales increases the value of customers. Sales 36,755,000. So we post there. We go to the next item, which is discount. Discount received. Where do we post? So here, discount. Discount received is how much? 110,500, isn't it? And then we have payment to creditors by check. Payment to creditors by. So they paid creditors by check. Where do you post? Payment to creditors. We are reducing the value of supply. So you write here, bank, isn't it? How much is it? 15,413. 15,413,000. Is it so? And then we have contra settlement. Contra settlement, we say here contra, which is 30, 46, 46,000, isn't it? Then you also post here contra. Contra is posted on both sides, 30, 46,000. That is contra settlement. And then we have bills of exchange receivable. Bills of exchange receivable, you write, it is like a check to, so bills of exchange, you write here, bills of exchange, which is 650, 6506,000. So you write there. Then allowances to customers here, allowances to customers, allowances to customers. How much is it? 1720? 1720,000. So we have dishonored checks, isn't it? Customers take dishonored checks. Dishonored checks, how much is it? 449,000. So we debit there. Then cash received from credit customers. Cash received from credit customers, where we post. So here we say they can either give cash or they can give. Credit customers can either give cash or checks, isn't it? So when they give cash or check, they are reducing their values. So we both will credit that one. So you just ask yourself, that particular transaction that you've been given, which account does it affect? If it's affecting debtors, does it increase debtors or reduce debtors? Correct? So now customers take cash received from credit customers, which is for 10, for 20, 1,000. Siko hivyo. For 21,000. Then refunds to customers. Refunds, you say they are here. Refunds. How much is it? 53,000. 53,000, And then we have discount allowed here, Discount allowed. How much is it? 732,000, isn't it? So we are through, That is the last. Now, when it comes to the closing balance, that is the balance at the end of the month. If they have told you that it's a credit balance, like now sales that you're being told is a credit balance, so you write it on the debit side. It means this side of the other side. So if they tell you it's a credit balance, to the closing one, you write the balance carried down on this. Balance carried down. It is credit of how much? 136,000, isn't it? And then the purchases you have been told is a debit balance of how much? So the balance carried down will be written here, correct? How much? 67? 67,000. After you've done that, and then you now determine again the balance here. So you add all this and you subtract this to find out another balance here. So can we add all this, including this one, minus all these items? And we also do the same here. We add this one, and then we get the balance carried down here. So do that one, everybody to do it. It is good to add it is good to practice addition and subtraction when you're doing it in class here, correct? Yes, okay. Right. So this control account doesn't have much to discuss about. Whatever it is that I've given you is all that you need to know. So now just try to see whether you can do this question that I've written here. December 2022, question number 1, November 2025. See, try to see whether you can do them. If you have issues, then we can repeat. CPA those questions on control accounts, attempt them, correct? Tumeelewana? So try those questions and see whether you can do them. So that is all you need to know on control account. So kindly confirm through doing this question and you submit. I hope you've done this one. This one is already been captured in the. So that is the end of control account. There's nothing much you need to know. So you need to know how to prepare sales ledger control accounts. You need to know the purpose of control account. And you need to know how to do it. That is all. Now we want to go to another topic. We call it correction of errors or errors. So we have errors there. I have shared. So this is our next topic. We call it errors. I have shared the notes on errors again. So we have a topic called errors. I don't know whether you can see it. Imekuja kweli? Imekuja? So you've seen that errors, isn't it? So we have an error. There are two types of errors that occurs in accounts. So when you're preparing accounts, sometimes you're bound to make errors and mistakes. So these errors, they are two kinds. We have those errors that don't affect the trial balance. So the first category of errors are errors that don't affect the trial balance. So this is the first category of errors. So what do you mean that they do not affect the trial balance? So the prepared trial balance will still agree with the errors. So the trial balance will not fail to agree. It will agree, but it has errors. That is why we say they do not affect the trial balance. Then we have errors that affect the trial balance. So those are the errors that will be revealed by trial balance because the trial balance will not agree. Remember, we said the trial balance, the debit and the credit side must be equal. So we have those errors that When they are done, they will not be revealed by the trial, they will not be revealed by the trial balance. So we call them the error that do not affect the trial balance. So we start with those ones. So the trial balance produced from the accounts appear correct, i.e. debits are the same as credits. However, errors may have been made, and therefore the balance shown in the trial balance may be incorrect. So this kind of errors, we have 6 of them. Number 1, we have what we call error of omission. Error of omission. That is the first error here. So the error of omission. Error of omission, this is where a transaction is completely omitted from the accounts. Are you seeing? So you omit a transaction completely from your accounts. Definitely, when you have done that, the trial balance will still agree, isn't it? Without that omitted transaction. But you see, there is an error there, correct? For example, you've been given e.g. a sales invoice of 4,000 is not posted in the sales journal. Therefore, no entry is made in the debtors account. So you've made sales and you have an invoice which is not posted to the accounts. So the accounts will still balance, but with an error. So this is what we call error of omission. A transaction is completely omitted from the accounts. A transaction is completely omitted from the accounts. Then number 2, we have error of principle. Number 2, we have error of principle. Error of principle. That is number 2 error. Error of principle. Error of principle. The transaction is posted to the wrong account, but of different class. Error of principle, you post a transaction to a wrong account, but of different class. For example, you purchase a motor vehicle. A motor vehicle is an asset. So instead of posting to motor vehicle account here, we have motor vehicle account. And then we have motor expense account. Motor expense account. So you purchase a motor vehicle. Instead of posting to motor vehicle, debiting motor vehicle, you debit motor expense. Okay? So the trial balance will still agree. Because you just have posted here, it will show a debit balance. The same way it is showing here. So this is an asset account and this is an expense account. So this is where you post to a wrong account of different class. Wrong account, different class. Wrong account, different class. We call it error of principle. Number 3, we have error of commission. Error of commission. This is where you post to the wrong account of the same class. Wrong account of the same class. Wrong account, same class. Wrong account, same class. For example, you have an account called TGen. You have a debtor called TGen. Another one, you have C-Channel. TGen and C-Channel. So you make sales to Gen. Instead of posting to the Gen's account, you post to Channel. Both of them are debtors. Are you seeing? So you, instead of posting to Gen, you post to Channel. So that is the error of commission. Wrong account, same class. Then we have complete reversal entry, number 4. Complete reversal entries. So this is where you post the correct account but on the wrong side. You post the correct account but on the wrong side. For example, you may e.g. cash drawn from the bank. You withdraw cash from bank, correct? So this is the bank account. And this, when you withdraw cash from the bank, you're supposed to credit bank. Remember, we said double entry when every transaction has 2 accounts. So the account that is receiving, you debit. The one that is reducing, you credit. So when we withdraw cash from bank for office, you're supposed to debit cash and credit bank. Bank is losing. So instead of debiting bank, you credit. Instead of crediting bank, you debit it. Correct? And instead of debiting cash, that is complete reversal. to the correct account, but on the wrong side. Correct account on the wrong side. Complete reversal. And then we have error of original entry. Error of original entry. Number 5. Error of original entry. Error of original entry. So this is where a transaction is posted the correct account, but the amount posted is not correct. The amount posted is not correct. So you post to the same, for example, you purchase goods. You purchase goods, you have 2 accounts here. You have purchases, and you're purchasing from, say, Peter. You're purchasing from Peter. So you purchase goods worth 50,000 from Peter on credit. So you're supposed to debit, you write here Peter, and here you write 50,000. So you understand. And then you write here purchases 50,000. So the goods value was 500,000. So you understated by posting 50,000. Both accounts. So that is called original entry or transposition error. Transposition error. That is error of original entry. So that is original entry. Then number 6, we have compensating error. These are errors which tend to cancel each other. So they cancel each other. I.e., if the effect of the error is to understate the debits, if one error understates the debit, the other one overstates the credits. So they cancel each other. So one understates the credit and the other one overstates the debit, isn't it? Correct? So that is what we call compensating error. So now, compensating error, they cancel each other, compensating error. So those are the errors that do not affect the trial balance. So one thing, I've seen a question where they require students to explain those errors without necessarily correcting them. They just give you to list and explain errors that do not affect the trial balance. So that is a common question. And in any case, they like this topic so much. In fact, last sitting it was there, and some students failed terribly, isn't it? Some students did not do well in this question. So this is a common testing area. You need to be very keen on it. Any questions so far up to that point? So now let us go and see how we rectify these errors. So we have an example there. So the example there, give the journal entries needed to record the correction of the following. Give the journal entries. So we use the journal entries to rectify errors. Narratives are required. So number 1, extra capital of 10,000 paid into the bank had been credited to sales account. B, goods taken for own use of 700 had been debited to the general expenses. And C, private insurance of 89 shillings had been debited to insurance account. And E, a purchase of goods from C Capedo of 857 had been entered in the books as 587. Number E, cash banked 390 shillings had been credited to the bank column and debited to the cash column in the cash book. F, cash drawings of 400 had been credited to the bank column of the cash book. And G, a sales of motor van of 1,000 had been credited to motor expense. So now when we're rectifying errors, we use the journal entries to rectify the errors. So this is how the journal entries appears. So this is how the journal entries appears. We have the debit and we have the credit. So we go one by one. So number 1, extra capital of 10,000 paid into the bank had been credited to the sales account. So now you need to know what happened. So you can come here and just do your own working somewhere separately and you post what happened, isn't it? So there's the extra capital. When there's extra capital in the business, you debit bank account. So they come here and so you have capital 10,000. and then you credit capital account. You credit capital account. You're supposed to credit capital account. But now what they did is they credited what? Sales. So they wrote here bank. How much? How much? 10,000. So when there's extra capital in the business, you're supposed to debit bank or cash account. And you credit what? Capital. So instead of crediting capital, they credited what? Sales. So that was a mistake, isn't it? So the bank account had no problem. The problem now was crediting what? Capital. So now how do you rectify that error? We need to come to this amount on the sales account, isn't it? And post it where? To the capital account, where it's supposed to belong. So to cancel this one that was posted in the sales account, we are going to debit it, isn't it? So we're going to debit here. So we're going to write here, we're going to debit sales by how much? 10,000. And we credit what? Capital. 10,000. So if they ask you to narrate, you say being correction of extra capital wrongly credited to sales. So you write here correction of extra capital wrongly or erroneously wrongly posted to sales account if they ask for narration, and then so narration will narrate what you're doing. We go to the next B. Goods taken for own use of 700 had been debited to general expenses. So when you take goods from the business for personal use, when you take goods from business for personal use, the account involves is, so here we have purchases. We have purchases account and we have drawings account. And here we have the general expenses. So when you take goods for personal use, you are supposed to credit purchases. So here they're supposed to write here drawings. How much is it? So 700, correct? And then they're supposed to debit drawings. But they did not do that. Instead, they debited what? General expenses. So they wrote here purchases. How much? 700. So instead of debiting drawings, they debited general expense. The problem was not on the purchases side. The problem was now on these two accounts. So now, to rectify the error, we're going to credit general expenses to eliminate this amount. And then we debit it where it's supposed to be, isn't it? So here 2, you're going to write here 2. You debit drawings to post that amount where it's supposed to be posted. 700, you post here 700. And you credit general expenses. 700. If they ask for narration, you say being correction of personal goods drawing wrongly posted to the general expenses account. Then you close that account number like that. So that is part B. That is, so you can use this one, can be your workings. So first of all, post the way you are posted, then now you rectify, correct? You go to the next account, which is number C. Private insurance of 89 had been debited to insurance account. Anything private from business is supposed to be debited to drawings. Anything private is supposed to be drawings. So there's the insurance. When you pay for any expense, the double entry is you credit cash or bank. That is the account that is losing. And then you debit that particular expenditure. So this was private insurance. So it's supposed to be posted to the drawings account. Drawings account. This is a cash or bank account. And then there is another account here called insurance. This is the business insurance account. So this was private insurance. So they posted here. It was how much? 89. So they said here insurance, correct? 89, which is a mistake. It was supposed to have been debited to. So here, this is what they did. They credited bank, which is correctly done, no problem. And they debited the wrong account of insurance instead of debiting drawings. So we are going to cancel the drawings by crediting it so that this amount cancels each other, isn't it? So insurance, then we debit drawings. So here we're going to number 3, we're going to write here drawings. Correct. How much? 89. And then you do what? We write here insurance. So you can narrate, you can say being correction of insurance incorrectly posted to a private insurance incorrectly posted to insurance account. Are we together? That is how we rectify those errors. We go to number A, B, C, D, E. Is it B? A, B, C, D. Yeah, it is D. So a purchase of goods from C Capedo of 857 had been entered in the books as 587. So there's a person called Capedo. When you purchase goods from someone or an entity on credit, the double entry is that you debit your purchases and you credit that individual. In this case, Capedo. So the value of goods that were purchased in the books, when we talk of the books, they are both books where the double entry occurs, isn't it? That is the purchases ledger and the suppliers ledger. So the value of goods was 857. So they wrote here purchases. How much? 587, isn't it? And then they wrote here Capedo. How much? 587. Is it so? That is what they did in both books. Which kind of error is this? Which kind of error is that? So it's an error of original end, isn't it? Where you post the correct account but wrong amount. So both accounts must have the wrong amount, isn't it? So they have underposted by how much? This amount was supposed to be 857, isn't it? But they posted 587. So you take the difference. The difference is how much? 4? So 270. So in this case, they have underestimated. So if you underestimated, you're going to add this one to 70, and you're going to add here to 70. Had they overestimated, you will have credited both. Yes. So we're going to write here purchases to 70. We're going to write here purchases 270. 270 to make it 857, isn't it? And then Capedo, the same amount, which is 270. And then you can narrate, you can say being correction of purchases of 857 incorrectly posted as 857, 587. Nenda haraka ama tuko sawa? We go to number E. We are number E now. I hope everybody is following. In case you are very fast, you can say so that we reduce the speed. Make sure we don't need to do so much. We need to do very little and everybody understands, correct? So the next one is cash bank of 390 had been credited to the bank column and debited the cash column. So we have two accounts here. We have cash account and we have bank account. So simply we are testing the knowledge of double entry. And double entry is simple. Then the account that is receiving, you debit. The one that is losing, you credit. So when you bank cash, it means that amount is originated from cash account. So the cash should be credited and the bank should be debited. So what is it that they did? So we go back, we say cash bank of 390 had been credited to the bank column. So suppose instead of debiting so they wrote here cash. How much? 390. Had been credited to the bank column, correct? And debited to the cash column, isn't it? So which kind of error is that? Complete reversal, isn't it? So to the correct account, but wrong side. So now how do you deal with those? How do you correct this error? You double this amount on this side, isn't it? You double amount so that one amount comes with this one and another one recorded the way it's supposed to be recorded, isn't it? So we double. So we're going to double what? We're going to debit bank by that amount. How much? 390 times 2? 780. And we also do the same to cash. 780. Being correction of cash bank erroneously debited to the cash account and credited to the bank, credited to the bank account. Error of complete reversal. That is number 5. Then we go to cash drawings. Cash drawings of 400 had been credited to the bank column of the cash book. Cash drawings, correct? So we have drawings, they withdrew cash. So we have two accounts here. We have bank and then we have drawings, correct? So when you withdraw money for personal use, you're supposed to credit cash. They withdrew cash and you debit drawings. So the drawings was correctly posted, which is how much? So here we posted correctly, isn't it? The mistake was instead of crediting cash, they credited what? Bank. 400 here. That was the problem. Now to rectify that mistake, you will debit what? Bank and credit cash. Yeah, isn't it? So here you write here bank, how much? 400 and cash 400. So this amount was supposed to be credited to the cash account, which was not done. It was instead credited to bank account. That was a big mistake. So that is how you do that one, and then you can narrate. Lastly, a sale of motor van of 1,000 had been to motor expenses. When you sell an asset, the amount of money that you receive for the sale of the asset, we say you debit bank. Anytime you're receiving cash, it is your bank account that is being debited. And then you're supposed to credit what? Disposal account. When you're disposing an asset, the account involves after receiving of the money that the proceed from the sale, you're supposed to debit your bank account. It is the bank that is receiving. So instead of debiting the bank, you're supposed to debit bank because the bank is the one that is receiving, and then you credit disposal account. So the problem was they correctly debited the bank, but instead of now crediting disposal, they credited what? Then motor expense. So now what do? You debit motor expense and you credit disposal. So can number say 7 motor expense, which is how much? 1,000, isn't it? So write here 1,000, and then write here disposal 1,000. So simply that is how we do correction. In some other question, they want you to narrate, you narrate. So the best way to deal with errors is first of all, post the way they have done. Like now, the last one, they sold a motor vehicle. So when you sell the motor vehicle, what is the double entry? You debit bank, you credit disposal. But what is it that they did? They debited bank correctly and they credited motor expense. Once you would go to that, now you can rectify. So first of all, you must identify the problem. You cannot solve a problem that you don't know it is, isn't it? First of all, you must identify the problem for you to solve it. Single. Yes.
Excuse me.
Yeah.
So, with the sale of the
Yes.
what are we considering the bank and the cash?
Mostly when you sell motor vehicles, a lot of money, isn't it? It's the bank, isn't it? Anything beyond 100,000, 50,000, you will prefer being paid through bank, isn't it? It is dangerous to carry cash around. Even the person coming to pay you carrying cash is there, isn't it? Even nowadays, we pay through M-Pesa mostly, isn't it? So cash transactions are very minimal to very little amount because of the dangers involved. Otherwise, any kupatia 200,000 tembea nayo kwa street, hautakuwa comfortable. Ila sasa utakuwa unaangalia mfuko paka. Unajua jamaa amebeba kitu, si ndio? Ama you won't be comfortable when you're carrying a lot of money on you, isn't it? Yes. So that we prefer transferring through bank account. So that is how we correct errors. Sometimes you can make errors or you can make mistakes, and then you go ahead and prepare statements with those mistakes. You prepare the income statement and you prepare the balance sheet with those mistakes. Once you identify the mistake and you rectify them, you also go ahead and rectify your statements. So now I want to see that question where we have mistakes and the statements have been prepared with those mistakes. And then we are able to identify those mistakes, and we need also to rectify our statements. So the example number 2 is that kind of example. So we're checking example number 2. But in the meantime, I'm giving you 2 minutes to relax before we do that question. Sasa, 2 minutes.
So now I want to see as the
Situation where, or a scenario where you've made errors and you've gone ahead, prepared a statement that has those errors. So once you identify the errors, you also rectify your statement. So we have an example there, example number 2. The statement of financial position of Capedo, a sole trader, at the 1st March 2020 was as follows. Capedo, isn't it? So we have land and building, we have been given 1650,000. You can see it, machinery, 1,750,000. Then we have stock, we have data. So we have been given a statement of financial position. And then we have been told, further investigation revealed the following. The closing stock, include damaged goods, which although they cost 10,000, have an estimated sales value of 7,500. That is number 1. Number 2, data includes 20,000 in respect of a customer who has gone bankrupt. A provision for doubtful date of 2.5% is also required. Number 3, the machinery was acquired 5 years ago and is being depreciated to discard value on a statement basis over 8 years. A more realistic estimate indicates that the lifespan will be 10 years. Number 4, wages owing at 31st March 2020 amounted to 9,500, but this has not yet been reflected in the accounts. Number 5, charges for the bank overdraft amounting to 8,000. That one, it means it was not indicated anywhere, the bank charges on the overdraft. Number 6, in arriving at the profit, Mr. Capedo had been deducted an expense, in arriving at the profit for the period, a drawing of 100,000 shillings paid to Mr. Capedo had been deducted as an expense. And number 7, 20,000 shillings rent owing to Mr. Capedo for the letting of part of his business premises to external party had not yet been received, and no entry had been made in the books in respect of this item. So required journal entries to correct errors and omissions, and B, a statement of revised profit for the year ended at 1st March 2020, and C, a advanced statement of financial position as of the 1st March 2020. So we are going to start with so here we're doing with errors. So we're going to open the journals. We said when we are correcting errors, we must have journals. So then we're going to be our journals. So we have the debit and we have the credit. So we go one by one. Number 1, the closing stock included damaged goods, which although they cost 10,000, they have an estimated sales value of how much? 7,500. So the closing stock, which is included in the statement of financial position, it has an item whose cost was 10,000, but now it has been realized that it can only be sold at, isn't it? So now there's a loss of how much? 2,500. So now how do you capture that? You reduce the stock by 2,500 and you treat that 2,500 as an expense by reducing your profit, isn't it? So how do you reduce your stock, or you credit your stock, isn't it? And then you debit damaged stock, or you debit profit and loss. To debit profit and loss means to treat that one as an expense. So the first one here, you are going to debit profit and loss account by 2,500 to recognize that loss as an expense. And then you're going to credit stock. When you credit stock 2,500 to reduce it to 7,500, isn't it? So you can narrate, if they wanted you to narrate, being a reduction in the value of stock, isn't it? Being a reduction in the value of stock. And then you underline. Nani hajaelewa hiyo? Ulipatikana stock yako moja, kuna item ya stock. Unajua stock is a number of items. So these items each sometimes has its value, isn't it? then you realize that there's an item there, you have overstated it. You cannot sell it at 10,000. If you was a business person, and then you realize that there's an item, you cannot sell it above the cost price. You'll be foolish to capture it as that cost price, isn't it? You need to adjust it to the current price that you can be able to sell it, isn't it? And the loss that the value, the extra amount that you used to acquire is a loss to you, is a loss to the business. And then we go to note number 2. Debtors include 20,000 in respect of a customer who's gone bankrupt, isn't it? We said when you realize that a customer cannot pay, you don't retain that amount in your books, isn't it? What do? You eliminate it from your books. How do you eliminate any amount that you have identified that is not going to be paid from debtors? So now double entry, you credit which account? You credit which account? You have identified a bad debt, it's not going to pay you. Which account do you debit? You debit bad debt account, isn't it? It will be an expense, isn't it? So you debit here bad debts. You debit 20,000, isn't it? And you credit what? Debtors. You reduce debtors by 20,000, isn't it? You reduce debtors by 20,000. So sawa. So that one being just a minute. Yes.
So we can continue, who want which number? Number two, right? So we will number two. Number two says, so data, isn't it? And then besides, remember when you go and check in the statement of financial position. Go and check in the statement of financial position.
So the statement of financial position that is given, if the balance of data there was how much? You go to the data, isn't it? So the balance of data there, we can rate this is the data's account because the balance that was there, that is the balance that was there. It is 420. So that 420, we have detected that 20 will not be paid. So we written there bad dates. Bad dates of how much? 20. So the balance carried down is how much? 400, isn't it? So in this very balance that is there, we are also saying we provide for what? For bad dates, isn't it? So provision for bad dates is going to be 2.5% of 400. That one will give you how much? 10,000, isn't it? So here you come, when you provide for bad dates, what do? You debit profit and loss account, isn't it? So right here, profit and loss account, 10,000, and you credit provision for bad dates. That is the double entry for provision for that bad dates. Now on the remaining of balances of the data that you expect to receive money from, isn't it? So now they're saying after you adjusted for the bad one, those ones that are remaining, the one that we consider good, we should also provide for bad dates of how much? 2.5%. So you come out, Relana. We go to the next number, which is not number 3. The machinery was acquired 5 years ago and is being depreciated to scrap value at a straight line basis over 8 years. So a more realistic estimate again that the lifespan will be 10 years. So in other words, they have been depreciating on their machine based on 8 years lifespan, isn't it? But it has been revised to 10 years, isn't it? So now when you check the costs of machinery, so the machinery, the straight line is we take the cost over life. That is how we determine the depreciation, isn't it? So this machine, the cost was 1,200,000, isn't it? So previously or up to the current period, we have been depreciating it based on the lifespan of 8 years. So what is this value that you have been depreciating? So 150,000, isn't it? For every year, correct? And then you multiply by 5. What do you get?
750.
You can see there they have written there accumulated depreciation 750, isn't it? But a more the realistic, the best one or the realistic one should be 1,200 divided by 10. So that one will give you how much? 120, isn't it? You multiply by 5 now. You get how much?
600.
600, isn't it? So it means they have overcharged depreciation by how much? 100 and so there's an overcharge of 150. So what do you do with that overcharge? So the ordinary way, the normal double entry when you depreciate an asset, we said you debit profit and loss and you credit provision for depreciation. That is a procedural way of recording depreciation expense, isn't it? Now we want to reverse that one by how much? 150 because of an extra charge of 50, isn't it? So now instead of debiting profit and loss, we're going to credit profit and loss and debit provision for depreciation. So we're going to write here provision for depreciation. How much? 150,000. And we credit profit and loss account 150,000, isn't it? Supposing you're the one narrating, how will you narrate that one? Anyone who can narrate for us, supposing you're required to narrate, what will you say that is? What correction will you be making there? Use your own language. Tell us what we're doing there. Being correction of an overchild depreciation for 5 years, isn't it? Wewe ungesemaje? Na lugha yako tu. Unaweza andika hata Kiswahili, no problem. Ungesemaje? Umeelewa lakini? Ama nakimbia mbio? Tunaelewana? So this is the easiest unit if you follow instructions, because they mark entries. They mark correct entries. They don't mark the entire answer that you produced. We go to number 4. Wages owing of 31st March 2020 amounting to 9,500. But this has not been reflected in the accounts. So there's wages owing. Owing means accruals. When there's an accrued expense, how are you supposed to record it? Anyone who can tell us? We have accrued wages. What do we do? Accrued wages. Remember we said accruals, you recognize them in the current period, isn't it? To recognize them, it means you have to add to the wages, isn't it? So you have to debit wages so that you recognize that part that is not yet paid, isn't it? And then the other one, that portion that is not yet paid, you treat it as a liability, correct? So you credit wages payable. So here you come here and debit wages. Number 5 here, you debit wages account, you recognize that amount in the wages, and then here wages payable or accrued wages payable account. So this one will be treated as a liability because it was not yet paid. It is not in the books. Now you put it in the books. How do you put it in the books? You debit the wages account and you credit wages payable or accrued wages. So this portion that is not yet paid, it will be transferred to the statement of financial position as a liability. That is number 4. Number 5, charges for the bank overdraft amounting to 8,000. So there's some charges to the bank overdraft. A bank overdraft is a loan, correct? So when there's charges, it increases that loan, and that charge is an expense to the business. So now you come here and write here number 6. So you write here bank charges of how much? 8,000, isn't it? Then now you increase the bank overdraft. You increase the bank overdraft by 8,000, correct? If you get a loan and the interest that you're charging on that loan, it enhances the amount of the loan, isn't it? You give me a loan of 10,000, you're charging me 1,000 as interest, isn't it? So what is the loan amount to be? It is 11. Similarly, yeah. Number 6, in arriving for profit for the period, a drawing of 100,000 paid to Mr. Capedo had been deducted as an expense. So a drawing was treated as an expense. So how do you rectify that one? Anyone who can attempt? What do we do? A drawing was treated as an expense. What do we do? Debit drawings account. You credit drawings to come to that amount and you debit expense. You debit expense. So that is number 7, isn't it? So here we have expense. How much? Is it 100,000? So this is 100,000. And then here we credit. Sorry, I want to do the right thing. We are not doing the right thing, isn't it? We debit drawings, isn't it? We debit drawings because it's drawings, isn't it? And we credit what? We debit drawings by how much? 100,000. Here we credit expense 100,000. Senor. And then next hiyo next number inasomaje? Imeisha? Na? Hebu soma.
20,000 rent owing to Mr. Capedo for the making of big cash of his business premises to external party.
Just a minute. So it reads 20,000 amount that was supposed to be received for letting out of the property by Capedo was not received by the end of the period, isn't it? So there's what we call rent owing. Rent owing of how much? 20,000. So when there is rent owing, how do you record it? Anyone who can attempt? There's an amount that you're supposed to receive on rent, but it's not yet received by the close of the business or the close of the year. Kuna pesa unafaa receive ya rent lakini hauja receive. Una debit nini? Una debit? Accrued rent income, isn't it? So accrued rent income. How much? 20,000. And you credit rent income. How much? 20,000, isn't it? That is how we extract those errors and mistakes, errors and omissions. Any question? Now we come here and prepare a revised income statement. We come here and prepare a revised income statement. We come here and prepare a revised income statement. So here we have the reported profit, the profit that was reported. Reported profit with the errors. How much is it in the trial balance? The reported profit in the trial balance, how much is it? In the balance sheet, the one that was reported with the errors. Ilikuwa ngapi? So it was reported profit was 450. So this is the reported profit. Now we check these errors, how they affect this profit. For example, number one is it's supposed to reduce this profit by 2,500 because of that damaged stock, isn't it? So we come here and write here damaged stock. Damaged stock, which is 2,000. So that one was a reduction item, isn't it? It was not done, so we do it, correct? We go to number two. There was a bad debt that was not adjusted from that profit. So we adjust. So right here, bad debts, which was how much? 20,000, correct? And then we come here, there was also a provision that was made, which was not adjusted. So we see we have said debit, profit, and loss. So we come here right here, provision for bad debts, which is how much? 10,000. So that one we deduct, isn't it? And then there is extra amount of depreciation that was written back to the profit and loss, isn't it? So we say here excess depreciation charge, which was how much? 100. So that one we add, isn't it? Then there's amount of wages that was not recognized, accrued wages, isn't it? So this one is accrued wages. Accrued wages. Ngapi? 9,000. So that one is supposed to be deducted, correct? So we deduct. Then there's also bank charges that was not factored in, isn't it? So we do what? We deduct. So we say here bank charges. Bank charges. How much? 8,000. So that one is a deduction, isn't it? Then here there was a drawing that was treated as an expense. So how do we adjust? It means if you treat an item that is not an expense as an expense, it reduces your profits. So we're going to increase it, isn't it? So here we're going to add here draw. How much? 100,000, correct? And lastly, we have accrued rent income that was not recognized. So we recognize it. We add accrued rent. Senor, accrued rent. Ngapi? 20,000, isn't it? So here we get the adjusted profit. So that is how we revise. So we check those errors, how they affected our profit. If they're supposed to deduct from our profit, we deduct. If you're supposed to add, we add. That is now the revised profit, which will be how much? 600 and? So now this one is supposed to be the revised profit, isn't it? So we come in, prepare the revised statement of financial or corrected revised statement of financial position. Revised statement of financial position. Revised statement of financial position. So we start with the non-current assets. Non-current. We start with the non-current asset. So the first asset there indicated is which one? Land. Land and building. This one had no problem at all, had nothing affecting it. So what is the value indicated there? 1650. 1650,000. So that one will remain like that, correct? Then we go to machinery. Machinery, we adjusted the accumulated depreciation, isn't it? So the original cost was 1,200, and according to us, it is supposed to be 120,000 times 5, which is, so here we're supposed to deduct 650, correct? Is that okay? So it's supposed to be how much? 550. So is it so? 550,000, isn't it? Tumeelewana? Imeandikwa hadi kwa hiyo paper. Sini ilikuwa how much? 600. So when you revise it, ilikuwa ngapi? Ilikuwa 600. 120 times 5 ilikuwa ngapi? It was 600. Also 120 times it was 600, isn't it? So inakuja ngapi? 600. Sindio? 600 now. So we only have two items of non-current assets. We go to current assets. Here we have current assets. So current asset we start with stock. So the stock value was how much? The one that is reported? 500 and we deduct this one, this deduction of 2,000, 2.5, isn't it? So what do you get? 570,000 minus 2,500. 566? 567. 567, 500. Then we go to debtors, is it so? Debtors we had, remember we had 420. This was a balance before adjusting for bad debts, isn't it? And also provision for bad debts, correct? So 420 minus 20 minus 10. Nakutupatia ngapi? So 390,000, isn't it? What else do you have in that particular statement of financial position as an asset? Current assets? Rent receivable. So we have rent receivable of how much? Rent receivable of 20,000, isn't it? So I think we have exhausted them, isn't it? Nakuja ngapi hiyo? So when you add this one, what do you get? 3227. And then here we come here, right, capital and liabilities, correct? So we had capital. What is the value of capital? Capital had no problem. What is the value of capital? 1890,000. So right here, 1890, 1890,000, correct? Then we have the net profit now. This net profit 670, isn't it? Then we left drawings. What is the value of drawings then before this adjustment? The value of drawing then, it was 150. So it is going to be 150 plus 100. These are the 100 that was treated as an expense, isn't it? So this one is going to be 250, isn't it? We have non-current liability. We don't have, isn't it? Correct? So here we're going to write here current liabilities. Current liabilities. So number one, we have trade payables, creditors. We have them. How much is the value? 630,000, isn't it? And then here we have bank overdraft. Bank overdraft is how much? The one that is indicated there. So 270 plus 8, isn't it? So this is going to be 278 plus this extra bank charges that was not recorded, correct? Then we have accrued wages, which is how much? 9,000? 9,500. Do you have any other thing? Nothing, isn't it? Can you try to see whether they agree? Ziko sawa? So that is how sometimes when you make errors, and those errors, they affect your income statements and statement of financial position. When you discover the errors, you, after rectifying them, you also go ahead and rectify your income statement. You also rectify your statement of financial position. So that is the essence of errors. So we shall continue with this topic on Monday. Thereafter, I'll give you more assignment on the same. In the meantime, you can do those ones for control accounts. Any question? Any comment? There being no question and comment, our class comes to an end.